sorry everybody. I kind of messed up the start of this live stream. What's going on, everybody? Thanks for jumping on. Unexpected surprise. Yeah, so I'm gonna turn on the music here. I'm gonna try my best to go live on Friday afternoons again, starting regular. If I can carve out the time, I will do it. Gonna make this a short session today. Just wanted to talk about, we brought up the other day just some simple, like how to get started trading, a very simple system. Good evening from the UK. Thanks, Z Colin. And so, yeah, I just wanted to start with, most of our listeners, my expected audience is the Conquer the Markets CTM trading community. And hold on a second, if I have to pull something up. And so, I talk about pretty advanced trading concepts, but I wanted to kind of start over and talk about some simple trading concepts for people that are just getting started. Turn this into a video later. Is the background noise? I've got one fan on because it is hot in here, and I killed as many fans as I could, but I got my AC in my office still running. Is that bothering anybody, or is the noise okay? First of all, before we get rolling here. Yeah, I wanted to talk about this. Audio's okay? Thanks for the like buttons, I appreciate it. Cool. All right, well, to get started with, and as usual, where's my not financial advice? All right, so thanks for being here, everybody. So again, this is what you hear here today, and this is, I'm not a licensed financial advisor. This is not financial advice. This is just my opinion, some information that you can use to, you can use it if you'd like, or throw it away if you don't like, but if you blindly take trades based on anything you see or hear here, without doing your own due diligence, you're likely just going to lose all your money and end up living in a van down by the river with Doge and Boneholder. Which Doge, he bounced back. He bounced back pretty good. I'm not currently holding Doge. 3 minutes till New York close. Let's take a look at current Bitcoin price action. Right, so I've got this little TP set up here. Here's that uptrend. Gemini was down last night, and I think this happened pretty late. This rollover happened pretty late at night. But I did log into somewhere else. I have some coins that I could sell. I did shave a little bit of Bitcoin since I couldn't get into Gemini to sell. I did sell a little bit on this rollover to buy back, which I did buy back here this morning at 631, 650. I also got stopped out at break even, 32,500. And when this snapped to the downside, I bought back in at 31,650. So all in all, I'm back in at 31,650, hoping to play an expected bounce on Bitcoin. Now I've been talking about, I expect a bounce back up to this trend line up here, to the mid 40s at least, to the 120-day SMA. This is the area I'm looking for a prolonged relief rally. You might call it a bull trap. I don't know. All right, but that's kind of more advanced topics. TP Life. I spelled it differently, but yeah. So I googled TP before I posted that, and you can spell it with the EE twice, or you can spell it TIPI apparently. I did not know that. Oh, that's news to me. Let me throw this on Telegram here. I think a lot of people do join from Telegram. Why is the name still wrong? It's supposed to be simple. Oh well. Simple Bitcoin trading system. So what I wanted to cover for the most part was just staying with momentum. Jordan talked about it. I didn't get to watch the live stream until later. I listened to it a little bit later. He talked about, how we kind of trade with momentum. And very simply, when you look at the Bitcoin chart, I'm going to put two simple moving averages on here. You can see that, there's definitely times it has momentum one direction and momentum the other direction. And so one of the simplest ways you can determine what the momentum of the asset is these simple moving averages are an easy way to determine momentum if you're wanting to use charts and technical analysis. So we'll talk about that here in a minute. But an even simpler way, there are paid for services out there, and this whole thing, it was kind of a reaction. I saw a tweet earlier that kind of ruffled my feathers, a couple of them now, that there are people out there paying for alert services based on how heat maps and risk levels and things like that. From my analysis of those risk levels and heat maps, I have not yet been able to find a significant edge with using any sort of paid for service, because all they are all doing is they're taking long-term moving averages and they're measuring the separation from the moving averages, and that's how you get these heat maps. So this is, if you go to lookintobitcoin.com, you can go to this is the 200-week moving average heat map, and this is doing the exact same thing for you for free. So if you really want to just buy, if you want to, the most simple method of getting involved in Bitcoin is a DCA strategy, and that's kind of the strategy that I'm talking about today. Is how do you dollar cost average in intelligently, and then how do you, dollar cost average out. So the one thing I'll say is that, hold on, let me turn this down. It's a little bit annoying me. The one thing I'll say is that, where was I going with that? I lost my train of thought. We get the flow back. Where'd the chart go? With DCA, if you don't have any Bitcoin and you have learned about Bitcoin, you understand what's going on with the cryptocurrency space, it's probably a good idea to buy some Bitcoin. And so right now would not be a terrible time to buy. As you can see, this overall, the risk level, you're back into potentially buying territory. This last thing turned blue, and typically when it hits these colors, it's starting to turn over and maybe heading down. But if you have an initial purchase here, but you save some money to dollar cost average down the road, where you want to heavily dollar cost average, you want to put more in when it's dark blue, and you want to put less in when it's light blue, and then you want to sell when it's yellow and red, right? And so just following this very simple, it's free to use, chart. Right now, this would tell you we should have sold some back in March and April. If you're following this strategy, we should have been accumulating pretty heavily through here, and especially on this big drop. And then you should have sold some, but you shouldn't have sold a significant amount, maybe 20% with these at $50,000, $60,000. But what this is telling us is that we haven't reached any sort of parabolic peak yet. The red is where you'd probably want to sell, say 50% would be a good level. When you get red dots forming, you might every a red month you might sell 10 or 20%, and then buy back in real heavy when it's dark blue again. So we're in that decision point right now as far as this chart goes and the heat map on this goes. So either we're going to do something like what happened here and turn around and finally make some red dots, or we're going to head back down kind of prematurely and make some dark blue dots. Nobody knows. I don't know. But if you're playing the dollar cost averaging game, if you buy a little bit now just so you're involved in Bitcoin, probably not a bad idea, but don't overdo it. And then you could buy yourself a lot more when we finally start printing some blue dots here. And this is a pretty good. I mean, you see way back here on the left. It's a pretty good, these purple ones would have been the best time to buy at $5. It's a great time to buy Bitcoin when it's $5. But I hope you get the idea. This is a very simple tool that you can use. Now, as you step it up and you get slightly more complicated, the next thing is the moving averages we were talking about. And so it's buying and selling with momentum. So you can see on this chart, let's go to Sats USD. It's got a longer term chart. Basically, I'm taking off. Well, I had these on log charts. Okay. So the Sats USD goes back to pretty much when Bitcoin started trading. And anytime you're above the 50 and the 120, whenever you break above both of them, when the 50 crosses the 120 and you break above it, that's a good time to buy. And whenever the 50 crosses the 120 and you get below it, it's a good time to sell. So where we're at right now, that's the predicament we find ourselves in. So those of us who are on the more technical side of trading, I personally am trying to play the inevitable. What's going to happen is it's going to bounce and hit one of these levels and then find it as resistance. So we're just trying to play that balance right now. But this is the situation we find ourselves in. We're below. So this was a good time to sell some, and this was a good time to sell some. And the next thing to buy some will be simply when we cross back above. An example of crossing back above. You can see over here, I went back and forth quite a bit. What you want is the 50 to be above the 120 and for price to be above the 50. Both at the same time. So the first time that happened over here was right there. Okay, the very first time that the price went, the 50 was above the 120 and price was above, closed a daily. So that's what you're looking for, is a daily close above the 50. It's a good time to buy, and then sell when it drops below the 50. So buy here, sell there. and then you would have bought next right there. All right, that's a very simple strategy. And you sell a daily when the daily closes below the 50. So you wouldn't have sold here. You wouldn't have sold here. You would have sold right there. So that would have been your sell when the daily closes below the 50. And that's it. That's the strategy. That's all you have to do. Is just wait for the 50 to be on top of the 120 and for price to be above the 50. So here, let's see here. This is a little bit trickier. You get back over here, 50 above. So the trickier part is when you're above, when the 50 is above the 120, and the price has detached from it. When do you buy at this point? You can buy on the cross if it's not too far away, and that's a nuanced thing. The better thing to do is to wait for it to come back beneath and then close back above. So the first opportunity you really had was right here to buy. That would have been your purchase. So the 50 is still above the 120, you got below it, got back above it, time to buy. And you would have sold it right here when you closed below it. So it would have been a small win. And then you'd have bought back right over here. It never closed below it here, so this would have been your buy. And you'd have rode that all the way to the first close over here. And then your next purchase would have been over here. Right? If you just use that simple strategy, it's a very simple, strategy of using the moving average. If you want to keep your trading super simple, all right? When the 50 is above the 120 and the daily closes above, so it goes from below and closes above the 50. What this does, ensures you're buying with momentum. So the 50 being above the 120 means that we have momentum going in the right direction. Not buying on the cross ensures that you're not buying when price is detached and they're going to come back down. So this is more pronounced over here. Okay. Yeah, it happened over here a couple times. But even then, on the cross here, if you would have bought here, yeah, you'd have been fine. Actually, here's an example of where you wouldn't have had an entry at all, right? You would not have had an entry here. So use your judgment on that one, right? 50 cross, you have a cross right here, but you never would have had that very simple entry I'm talking about the whole time. But the bigger moves, you're typically going to get the bigger moves doing that. Okay, that's a very simple strategy. And you can just buy and sell the close. Like using the 120 to make sure you're above the 120 keeps you from doing. It keeps you, if I take the 120 off of here, one small thing, it keeps you from getting whipped around, trying to buy this, sell here, buy here, sell here, buy here, sell here. All right, it's all these small purchases. You would stay away from all that, having to be watching your charts all the time. But you can just buy and sell around the 50. If you just do just that, buy a daily close above, sell a daily close below. If you back test that, you'll do pretty good. Those are some simple strategies just to get started. And then you start to layer on the CTM methodologies, understanding trend lines, support and resistance, and the interplay of support and resistance with price. But this is a very simple, and you can use the 120 too. If you want to be really as simple as possible, is buy daily closes above the 120 and sell daily closes below the 120. That's another just super viable, simple strategy. Anytime it closes a daily above the 120, you can buy, close daily below, sell. And there's not a lot of those interactions. Those are a lot less than the 50-day. The other thing I want to talk about was, again, these services out there. I took a screenshot of this photo. This photo gets thrown around a lot. This is specifically with, you hear a lot of noise about lengthening Bitcoin cycles. This chart right here is very disingenuous. This is not accurate, and I'll explain why it's not accurate here in a second. But the other problem that people are going to have is when they look at charts like this and they start to see theories, very macro theories about things like lengthening cycles and even 4-year cycle for that matter. But any of these theories around modeling, the risk you have is if you're a proponent of the lengthening cycle, you're going to stay away from any of this strong price action ultimately. Like you would have been. Like I bet most people who were thinking that we were in a lengthening cycle would have been completely out by $20,000 and wouldn't have ridden this bigger move here. And the other problem is that when the bear market, if the bear market peaks, say Bitcoin peaks out late this year, early next year, the other problem is the people who believe in lengthening cycles. 2022, 2023 is going to be potentially a rough year for them because they're going to keep trying to buy the dip when their risk metrics say it's time to buy the dip as prices coming down. And if we enter a prolonged bear market 2022, 2023, you're going to be upside down for a long time. That's why I'm trying to address this. I see the problem coming for 2022, 2023. It's been a rough time. This last sell-off has been rough, and we may be entering a bear market early. I mean, I'm not going to discount that. But the other problem that we're going to have is that if we are entering a bear market, or if we make a new high later this year, so all of those, the point of me bringing it up is all those kind of macro thesis things. It's going to be much harder to be accurate with trading that. If you want to be as simple as possible, again, just using a free tool like this to DCA in, just buy a little bit every month, every blue month. Just literally take, some of your paycheck and set aside, whatever spare funds you have, a couple of Starbucks coffee's worth of money a day even, and just buy you a little Bitcoin every month that is blue. And then just sit on the sidelines and watch. And if you park some of your funds in a hardware wallet and put some of it on BlockFi or Celsius and collect interest on it, you can be also collecting some interest on what you're holding while this is going on too. I wouldn't recommend all of it being maybe 50% at most on a interest collecting service. But you can be collecting interest while you wait for all this to play out. And then when things turn orange and red, then you sell a little bit and buy back. That's the simplest of all strategies. If you want to be a little more complex, if you stay on the right side of these moving averages, you're going to stay on the right side of the market. Like right now, it's not a good time to be buying. We want to wait for the market to recover. And so really, again, I'm trying to be a little bit technical and playing a bounce off of here. If you see my posts on Twitter and you're not an advanced trader, I would ignore all that. That's I'm taking a stab. I'm taking a very calculated stab and very tight stop losses. I'm using some other methods to try to prevent myself from, losing on stop losses, getting out near break even. But I'm trying to play a small bounce here. That's all I'm trying to do, and then I will be real quick to exit. That's very technical and very complex. And right now, this is not the environment you want to be buying into. The safe play is to wait for this 50 to finish coming down and price to retake that 50, and then maybe give it a shot. But the 50 is going to be under the 120, so it's going to be a dicey proposition until both those things happen. So no matter what, this simple strategy, just using these moving averages and buying a close above and selling closes below, daily closes below, will keep you pretty much on the right side of the market with momentum. It's a very simple strategy. All right. Just joined. Thanks for covering this info. No problem. It seems 3 days ago we go up and it takes only 1 day to wipe out 3 candles. Seems more bearish. Personally, I'm okay for entering prolonged bear market now. There's no guarantees the market. Any strategy should be accounted for. And any strategy should account for being wrong. That's a good point. Not my base case, but position for it. How would you exit at resistance in that relief rally? I fear the ending of FOMO in later if it breaks resistance. So for me, it's pretty simple. Let me look at my master chart here. What I'm trying to play right now is what I think is inevitable. When you have these huge sell-offs like this, it's more likely than not that you're going to get a relief rally, right? But the thing is that I'm buying into support levels, and I know really fast where I'm wrong, so I can take a quick exit. What I think is going to happen is I think we're going to make it at least back to the 120. That's my opinion. Now, the problem is the 120 is a moving target, so we might make it to the 120 when the 120 is all the way back over here. I don't know exactly, but I do know that we're going to get some sort of bounce. Now, people could argue this is the relief rally right here, and that might have been all we're going to get. That came to me. This was a tell. It didn't touch the 200-day. It did over here, right? But this is more like a dead cat bounce, automatic resumption, or automatic reaction. Is the Wyckoff term for it, I guess. But if I go back to last cycle, let me show you, or other sell-offs in general. You see this sell-off right here? Where did it bounce to? After a prolonged sell-off, it disconnected, created some space, and then it bounced right into the 120. Right? Let's go over here. Same thing over here. You know, it lost the 120, traded below it for a while, came back into it as resistance, and then rolled over. Now, the nature of this was a more, so this is a more acute, obviously a blow off top, and so the sell off, the bounces and the sell off are more pronounced. So we may not get the same type of relief, you know, rally or this bounce action, because the price action was more of a controlled roll over. It wasn't a blow off top in a daily or weekly. It was a blow off top on a monthly chart. That's true. But, you know, I keep contending that we're likely going to form a bottom and roll back over, and that's where you get your extended. Because if I put it this way, because the rise was sharp and the rollover was slow, I think the fall was sharp and the rollover is going to be slow to the relief rally. And then if we get a relief rally and we continue down, we're going to rally. Typically, these sell-offs rally 50% back. So if I were to take the totality of the sell-off, let me go to a fresh chart. Here we go. Perfect. I have the fib on here already. Typically what happens, if I take the totality of the sell-off, right, so on a longer time frame, you almost always make it back to the 5 level for a relief rally or bounce, right? So far, from the very top to the very bottom of, you know, this recent price action, it's probably more accurate to paint that here. You typically make it back to the 5 level, right? So if I start it here, the really steep sell-off, and then the really, you know, this price that it actually hit down here, we never made it back to the 0.5. And so the fact that we only made it to the 382 level is kind of also telling to me that we haven't got the bounce back yet that we should be getting. So what I'm waiting for is basically 45,000. Now, again, this is a calculated risk reward. The odds of this bounce trade working out, I don't want people to overthink this, because it's really the odds of this working out are not 100%. This is like a 50-50 proposition at best, probably more like I have a 20% chance of being right. But you take the risk reward of it. I'm putting my stop, you know, really, okay, say we put a really wide stop down here, and we're taking entries right here. If I put it on as a trade idea, trade ideas, long position. Right, if you set it up as just a trade idea, right, the odds of this trade where I just bought this and then where my stop loss would be, that's a 4-to-1, roughly a 4-to-1 risk reward is what I'm trying to play. I have about maybe a 30% shot of it working out. So all in all, it's not the best trade in the world, but it's worth layering some of these in, because the other part of it is you could get a breakout above this and ride that trade further, but I wouldn't bank on it. The other thing too is that realistically, that's my technical stop. I'm probably going to be out if we lose 31,000, right? So I just bought recently here at 31,650. Let me get down to the low, very low here. I bought at 31,650. 31,650 is my last purchase. After getting out I actually technically made a small profit, and then I would be getting out at like 31, you know, below at this point, because we're starting to rally 31,000 something. So let's just say 30,800. Right, that's really where I'd probably be out. Like whatever this daily wick is here, if we get back below that again, I need to get out. 31.7. So say we just say 31,000. Now I'm probably after this live stream, I should go change my stop loss. Now you can see that's a what is the risk reward on that? 18. The risk reward is 18 on that, right? So you know, 18. That's a big gain for if it's only a 20% chance of, at this point, because if I tighten my stop loss, I'm reducing the odds that this trade works out in my favor. So maybe I should set the stop loss to like right at 30 or something, 29 something. And that's a 7-to-1 risk reward. And you know, I have about a 20% chance of that working out. You do enough. You take you know, 10 trades with a 20% chance of working out and a risk reward ratio of 7. You're going to win. You're going to win 2 of them. You're going to have 8 small losses and 2 big wins. That's the name of this game. That's very technical. It's like antithetical of what I'm talking about. And the reason I want to talk about this is just people, if you're trying to play this very technical, right now, my point is the safe entry is to wait to retake those two levels. Really, or the most important trend line that matters. This is one that Jordan was talking about in his live stream this morning. You want to get outside of this price action over here, and then you can go long again. But until then, we're just trying to put a base in. All right, those are my thoughts. Let's see if we got any more comments here. I'm doing good, Craig. Thanks. When you tighten your stop loss, it won't change your position size. No, not when I change my stop loss. So my initial stop loss, whatever my initial stop loss is, you calculate your position size based on your risk. If you're going to risk 1%, you have a certain stop loss, right? You have a certain position size based on how far the entry is from the stop loss price. And so you size your position based on where your stop loss is to your entry. Now, if price goes in your favor and you move your stop loss up for one reason or another, typically you move your stop loss. Most commonly, when you take the next resistance level and price confirms that next resistance level, is typically that's your opportunity to take your stop loss up to break even, which is what I did last night. So this sell off here, my stop loss was moved to break even when we broke above this level over here, and now it came back into it, and I had to buy back in this dip. We get the lower time frame. This is again a lot more technical than the simpler strategies. So trying to play this right now, and another reason I'm kind of covering this is because this is my last attempt. I'll tell you this much: if we don't get a solid bounce here, which I do expect that we will, this sell-off has been too pronounced. There's way too much fear and everything. This level I'm staring at, I think, is a really good place to look at. That's that 0.5 fib, level, and it's going to line up pretty well with the 120. Might be down there by the time we get there. And then our most important trend line. Where does that come into play? Hold on. It's like on let's look at the days here. I'm just trying to figure this out here real fast. Today is the 25th. By the time that meets that is the end of July. Wow. So anyway, but the 0.5 level is really what I'm aiming for if I were to boil it down to everything right now. It's not so much these SMAs, it's really just the 0.5 fib level. Do I still believe ADA is going to 50 cents? It's the question I just asked. I don't have any belief about anything right now. I'm entirely focused on playing this likely bounce and then going from there. The reason I'm focused on playing the bounce too is that will tell me, like when we finally do get this relief rally, that will tell me where we're going next. If we roll over, if we hit the 200, if that confirms as resistance, if that's the level, which I think is pretty close. Actually, let me go back to the other chart I just had. That's probably the closest level to that. Yeah, see that 200 level is going to be really close to that 0.5 fib as well. If we hit this level and curl over, that will tell me that we're in for some prolonged downturn, probably. More likely, the probabilities increase. Everything I say and everything I do with my trades, it's all playing probabilities. I also remember that. Whenever I say something, people ask me a question on here, and I say, I think it's Bitcoin's going to $1 million next week. I'm never saying that emphatically 100%. Unless I say I'm 100% certain of this, which is probably rare. It's what I'm thinking in my head is this is the most likely out of 3 or 4 scenarios. This is the most probable. Means that, so for me, I think that Bitcoin will probably get back to testing the 65K high by the end of 2021. And the reason, I just think we're putting in a base here. I think we're going to get a relief rally, and then we'll see what happens from there. And I think it does break through the relief rally at some point, does break through, and then we test the last highs. I'm not as convicted that we're going to go to 100,000 plus this year because there's just a lot of variables there, and the powers that be may be trying to stop Bitcoin, and they're really taking action as it hits a $1 trillion market cap. That may be what's going on, right? And so that's the $1 trillion market cap's, just north of this line. It's actually pretty close to the $1 trillion market cap too, as well. Interestingly enough. I think the most probable scenario, like right now, it's about, I would say 60%, most likely 60% chance that we make it back to this line. Really, honestly, that's the most probable scenario. The other option is that we continue to consolidate above this support level, and then it eventually breaks as we keep testing it, and it breaks to the downside, and we go down to 20,000. That's the second most likely scenario, and that's probably like a 30% likely scenario. And then you have, you know, very unlikely scenarios, like some really bullish news comes out, and we just blow out and just go straight to the upside. And then the other scenario would be something really bad happens that none of us are anticipating, and we just go straight down to like $3,000. Those are possible scenarios, not very likely. The most likely scenario, you know, staring me in the face is there's a 60% chance, I'd say, of us making our way back up to here and then rolling over. If we're going to roll over, it's going to be, you know, for the final time, it's going to be probably up here. It's a slightly less probable in my book than us breaking down and going to 20,000. But they're pretty close. I mean, 60% is probably generous. That's probably more like a 40% and a 30% chance of those two scenarios playing out. So, all right. But yeah, so on ADA, it completely depends on what Bitcoin does. It completely depends on a lot of things. There's a less likely scenario that there's legitimate concern around the proof of work and, you know, the green movement and everything else, and that ends up killing Bitcoin while Ethereum and Cardano thrive, right? So there's a scenario that says that actually what could happen is that all the money from Bitcoin moves into, you know, these proof of stake networks if the attack is organized and sustained enough against the energy usage of Bitcoin. That's another possible scenario. It's more of a macro, you know, thesis thing. But in any of those scenarios, back to the point I'm trying to make here, is that the simplest strategy is to trade with momentum. And, you know, whereas this is my side. I'm going to show you this chart. I showed this one yesterday. It's like, you know, if you look at this as like a sine wave, right? You know, we're as far as the timing goes, we're probably pretty close to finding ourselves a little bit of a bottom here, wherever it ends up being, and then, you know, it may take more time for us to finish bottoming out too, if you look at it. But this doesn't have to be symmetrical. This is just a, you know, just a way to look at why I think that the downside wasn't going to bounce back immediately, just because it's the way that this rolled over. I'm losing my train of thought here, but yeah, I mean, you see on this chart too, there's my two levels, 28.8 and 20,000. And that, to me, either we're going to hold 28.8 or we're going down to 20,000. And I expect 20,000 to hold unless something drastic is happening. But yeah, the world exists, again, that, you know, this Bitcoin dominance chart, that we are getting a small dead cat bounce and it continues down because there's a sustained attack against Bitcoin. So we don't know. There's a lot of things that could play out. Surfing into the BTC fire, yeah. So with the safe strategy, again, we're under all the moving averages. So this is not the time to be getting aggressive with buying if you're DCA. If you're a trader and you're trying to trade like us, that's one. You know, there's all kinds of ways to take advantage of these moves. But if you're just trying to play this very simple and dollar cost average, you know, you want to be dollar cost averaging. You know, ideally, you want to be dollar cost averaging when these are light blue, and you want to be more aggressively putting funds into Bitcoin when both these are light blue and it's above the 120 day. But the other thing too is if you're doing a dollar cost average, all this stuff about the moving averages doesn't matter to you, right? If you just are bullish on Bitcoin long term, all this stuff, this is if you're going to swing trade in and out of Bitcoin. Is, you know, you can use these SMAs as a very simple close above it, take a trade, close below it, close your trade, right? If you're going to actively swing trade, this is like the simplest strategy I know of to swing trade any asset, really. You can use this with pretty much anything. These three moving averages happen to work really well with Bitcoin in my book, from my testing and my usage of it. That's why I'm bringing them up. But I wanted to make a video. Really what it boils down to is I wanted to make a video for those who are really new, that you know, have been seeing all this price action play out, and they're just thinking, okay, maybe it's time for me to start buying a little Bitcoin. It went all the way up to 65,000, it's back down to 30, and that's a very pragmatic and smart way of thinking about it. You know, if you're in that camp, you're doing it right. You didn't FOMO in at 65,000. You watched, you've observed, and you've waited until a better opportunity has presented itself. And so, you know, it's not a terrible time to get started. Just be aware like that scenario I laid out, that we are on the wrong side of the moving averages. So if you want to make an initial stab at a purchase here, it's probably worth getting involved in. We are at a point now where we could hold and resume up, but likely, the likely scenario is, you want to wait for these moving averages to retake these moving averages if you're going to try to swing trade this, or if you're just straight DCA, this is the time just to watch and just wait. As you can see, when you get in these colors here, you're at a decision point as to which direction you're going to go. Over here, you see we have similar colors that were printed, and then we shot up. Similar colors were printed, and then it shot up. Similar colors were printed over here, and it went down. So this is a decision range. We haven't hit any red here so far. So that's what you're waiting for to sell, and you're waiting for these dark blue to purples to buy. So simple, simple, simple. Trying to keep it simple for the new people here. If we're actually mid-cycle dip, then the bottom might be, if it's not near 18K, in my opinion. Might be in. Yeah, if we're in the mid-cycle dip, the bottom is probably in. That's a good way to look at it. That's a fair point, right? If we're in the mid-cycle dip, the bottom is probably in, and we are going to get a nice bounce. And so I'm being pretty aggressive in trying to play this initial bounce, because if this is the mid-cycle dip, I'm not going to bet the farm on it being the mid-cycle dip, though. As far as my trading accounts go. If it is the mid-cycle dip, then if we try to play this relief rally, the relief rally might turn into a bigger sustained rally. So we'll just have to see how that plays out. We don't know. I thought the bottom was in, but every day is a different ride in the world of crypto. Yeah, well, I think it's more likely that 28K is the bottom for, say, the month of July. Like I think for the next, we're pretty close to it right now. So, if it's going to break down below it, it could happen here pretty soon. But I think this line is this level, this 2021 open level, is probably safe for at least another couple of weeks. I really do think we're putting in a bottoming pattern. This is just what I see. It's a very typical bottoming pattern. And I know there's people with Wyckoff accumulation distribution. And it's been tracking Wyckoff stuff super close. It's kind of crazy. But I don't put. I'm not a Wyckoff trader, so I can't really comment intelligently on that. I don't know exactly if this counts as Wyckoff or not. All I know is I'm seeing a clear bottoming pattern, where we had a peak sell-off accumulation, your typical dead cat bounce, and then we've been range bound for a while. We had a sell-off event that took out the lows, and we had a strong reaction. In my book, this bounce back was a very strong reaction. It's smaller of a bounce than this bounce, but if you see the preceding sell-off, here's the main difference. This sell-off from here to here was much larger, right? So the bounce is going to be larger. There wasn't, I guess there was from here to here, pretty acute sell-off in that bounce, but we were from this point to this point, we're down hardly at all, and you got a really strong bounce out of there. This is kind of typical of a bottoming pattern, right? Now, I don't know for a certainty, nobody does, but this feels more like a bottoming pattern. And days like today, when everybody's freaking out and the market's down, what it was 8% at one point in one day, right? Those typically are days to take a stab at buying into support and then playing the bounce, because it's probably going to bounce. Yeah, we're down 11% from the peak in one day, 11%. So the odds are that it's going to bounce, and it kind of has already bounced a little bit, right? So from this peak over here, and this all happened within 24 hours, this peak to that sell-off. So, you don't want to be selling or trying to go short after you've had an 11% move either direction. It's not the time to try to play that momentum. You want to wait. So if you're going to short Bitcoin, the thing to do is to wait for it to come into resistance. Like these shorts did here. They waited for this resistance here. They waited for this trend line, and then 56.6 roughly, that level, and they piled on. After an 11% move is not the time to start. That's the time to try to ride the reverse direction if you're going to be like an active, very active trader. But, all right. 30K has been rated too many times. 30K has been rated a few times, but it's got a strong. So every time it gets below 30K, look at this chart. Okay, let's draw a line right at $30,000. It's like this particular one. Let's draw a line at 31,000. Okay, let's go down to 31. I'm just going to take it down to 31,000. This level right here. $31,000, which is on a 4-hour chart. Exactly 31,000. Alright, so every single time we've been down there, we get a strong reaction at the upside. Now, I get your point, and I've heard people say this a lot, that the more times this gets tested, the weaker it is. I don't necessarily agree with that. So you can't see hidden buyers, and their orders a lot of times aren't on the books, but right there, right there, right there, right there, and then so far, so we drop below it, right? We got a real strong reaction, and so far we're getting a favorable reaction as we come into it. So we'll see if that holds up. But at some point, you're right. What happens is that these supports hold until they don't, and then when they don't, it just snaps and they lose it hard. So we'll see what plays out. We'll see what plays out. Like I said, I've got my order here. If we roll over, see, I'm watching this trend line real carefully. I would not be surprised if we kind of follow this trend line down and then try to break out above it here. If we follow this trend line down and we just keep fizzling out, as soon as we snap 31, it's going to go down hard. So, I may, after I get off of here, just after talking this through with you guys, I may tighten my stop loss up to right below these wicks even. Because it needs to either break out here or it's going to roll over and die, right? So, I need to tighten up my stop loss probably because I got the bounce, and the bounce either needs continuation. We need to break this trend line and get some continuation, or it's going to roll over, and we're going back down. So that's a fair point on the 31,000 being tested a bunch. It is at the bitter end of its life here, and either we're going to bounce off of this, or we're not. It's that simple. All right, could be definitely wrong. Feels like the 6K bottom to me again. Yeah, I mean, we'll see what happens. Please, if you would not mind moving the screen with your face. Uh-oh. The left-hand side of the screen. Let's do that. Is that better? Is that easier because y'all can see the numbers better? Sorry about that. Thanks for the recommendation. Your face keeps blocking the chart. I'm sorry about that. All right. Possible that the current bounce is a bear flag. Yes, it's possible that that's a bear flag. I actually was looking at that earlier too. Certainly possible. Certainly possible. Something else. Like I said, pretty much that's really good. Actually, thank you. That's a really good level. If we lose this bear flag, it is a bear flag potentially, right? We have this downtrend that we're trying to break. So this is going to give us some good intel here any second now as to which direction this market is going to want to go. If we can break to the upside, great. If we hit this resistance and roll over and lose this flag and really just keep riding this trend line down, it's probably a good time to trim some positions, or I will probably go look to trim some positions when we get off here. All right, I'll leave the video screen is debatable. I think what the video screen does is it gives people, when I'm not looking at a chart, looking at something specific on the screen, it gives people something to watch because everything else is static. In my opinion, this isn't the mid-cycle dip. 24 to 28K is pro. All right, my streaming software has been acting up. Am I back now? Oh yeah, for now. As price is coming down, when Bitcoin's crashing, bottom left. When Bitcoin's mooning, bottom right. Got it. We'll do that. A Bitcoin mooning, I'll go bottom right. Bitcoin tanking, I go bottom left. There's a lot of new resistance above us. I agree, and I'm starting to get, like I said, we'll just see. I'm liking this zone of support we're potentially putting in, but yeah, if we break it to the downside, it's going to fly down. I mean, 20K is what I got. That's my target. If we lose this level, right? So a lot of people are screaming for 20K. There's a lot of reason to think we might not get there but you just don't know. Nobody knows. The other people who are talking about 20K, they could be right. That's the truth. They could be right. We don't know. This is kind of an unprecedented, cycle, which is both bad and good. It's bad because, I know a lot of people were kind of banking on, I lost my internet here for a second. A lot of people were banking on riding this cycle out all the way. But it's good because it's going to give us a lot. I hate to say this, but it's good in the long term if you stay with us and keep trading with us. It's give us a lot more data about how, you know, the crypto market reacts to certain things. We're back. Yeah, thanks. All right. Big analysis on BTC. Buy the dip. Time to buy. After exiting on 0.5 fib, what should happen for you to get back in? So Max, great question actually. Let me put the 0.5 fib back in whatever chart, this Gemini chart here will work. I won't necessarily exit right at the 0.5 fib. It just depends on price action coming into it, but I will definitely take some off the table for sure. For me, what I'm going to do is if we get a good move into that fib level, I'll do the same thing. I posted this last night. I couldn't make the move last night that I wanted to make because stinking Gemini was down, and I could only sell a little bit of what I had somewhere else. Was this 1 hour? Is that right? That look right. You know, I had a kind of a trend line I was watching here as price. Is this right? 4 hour chart. Something doesn't look right here. Oh, well, you get the idea. I'll do the same thing I always do. I'll draw a trend line on the move that took us into that price level, and if we fade, right, if we roll over like this did, so right here is my signal to get out. This one's not looking quite right. I just don't know, I don't like this. This data feed's weird. Let me go to another chart, hold on. Why does it look totally different on the Coinbase feed than the Gemini feed? I don't know. So this is what I was watching last night, and I was going to exit. So as we came into this is the trend line we've all been watching here. I'm going to make that pink for you, purple, whatever, and make this trend line less obnoxious so you don't pay attention to it as much. Okay. So that trend line that I was focusing on, that was key resistance to me. And so this would be the same, you know, I'd be watching the 0.5 level just like I'd be watching this trend line. So as we come into that price level, I'm going to see what price does. And you see I had this this move, you know, this parabolic, I call it parabolic trend lines. This price quickly came into that level. It hit resistance and it bounced off. Probably, you know, this would have been where my initial take a little bit of profit right here, right? And then I'm watching the rest. It came into this, it bounced. You know, it fell below my trend line here, but it bounced up into it, which it almost always does. But then it fell back over. When it faded, right here is when I would sell normally. So normally I would have sold as we faded. I can show you a million examples of this. 9 times out of 10, when you lose these trend lines, you'll bounce up into it and then fall back down, and then that's your opportunity to exit. Sometimes you just like tank like a, you know, you just tank really bad. And at some point, you just have to make a call and put a you know, a loss, stop loss in here. And typically, I'll do it on look at one of these wicks over here. So if I'm looking at a 4 hour chart, I'll find like the next bearish candle, and at the bottom of it, that's where I'll sell, or the wick. I'll just pick a level if it starts to come off too fast. If this would have come off way too fast, I would have been like, all right, I would have looked over here and seen this. Like these are Heath levels, we call them. That level, and I would have said, okay, I'm just gonna, if it's coming off that fast, I'm just gonna sell when we breach one of those levels. But if it doesn't come off too fast, what I try my best to do is let it bounce back up in that, and then roll over and sell when on the bounce back up. I'll show you some broader examples. The last, you know, really solid move I had was Ethereum. That I did that. So if we had a big move like this back up into that 0.5 fib level, you see here I was watching these fib levels on Ethereum, and I kept riding it because it kept staying above this trend line, right? So I kept riding this move, broke through this, broke through that fib level, broke through that fib level, broke through that fib level, and it never came back below this trend line. It just kept going and going and going. So I finally sold when it went off my charts, but what I really waited for was a breakdown. So it hit this resistance. That resistance, it sold off hard off that resistance, and then bounced back up into this trend line. That's where I sold. We're clearly now below this trend line, back above this fib level. So I started selling a little bit here, and as it rolled over, especially there is where I sold. And I think if I had a 4 hour chart, I can show you. So I'll do the exact same thing with when we come into the 0.5 fib on Bitcoin. Yeah, so here was my actual technical. I was watching the 4 hour chart. My signal was we bounced into that trend line close enough for that, I could have moved the trend line to make it a perfect hit too. Actually, I'm gonna go ahead and do it. It was actually pretty perfect. This is just a fantastic example. And then I sold. You see that 4-hour candle right there? That bearish candle. When we printed that bearish candle, I sold the next time we lost it. So that was right at $4,000. So that price action there, that was a confirmation of rejection of that trend line. And then I sold probably whatever else I had left when we lost that level right there. Out, back up into it, sell. But those are just little hints that I use. And sometimes, a lot of times, this methodology is just how I use to exit, things that are strongly trending. A lot of times what happens is if it's going to continue up, it'll just snap this, come back in here and just consolidate. And then, you wait for like that resistance that you were watching. When it breaks, you re-enter. So it's a small penalty for taking that, but a lot of times it works out and it ends up selling off really bad. Like this was an extreme example. Normally it didn't sell off that bad, but you get the idea. That's exactly what I'll do with Bitcoin. So we're closely monitoring. These patterns are what, like this, thank you again for whoever called out the bull flag. These patterns are exactly what I'm looking for to help me clue me in that, all right, my bounce is not going to be, we're fighting with this resistance right now. If I go to a really low time frame, this is possibly consolidating below resistance. It could also possibly be, we're just going to get rejected at resistance. We're now technically over this line here. What's probably going to happen is we're either going to snap this and it's going to make a big green candle because shorts are going to be covering, or we hit the bottom of this flag and then break down and then continue the downtrend. But if we do break above here, let's go look at the shorts volume here. Hold on. Yeah, this short. Look at this. This is insane. That's short. And in one day, before it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It took them 10 days before to build a short position that size. They did it in one day. One day, built the same short position in a day. And with all that shorting pressure, we've actually been holding up pretty well, honestly. So that's interesting. I want to talk about one more thing and then we'll wrap up. Hi family, these charts are all on par with the textbook. Soon, as we moon, you'll be thinking about going up. Short ratio is still climbing, yeah. I hate it when you sell that parabolic move and then price chops in a range. Yeah, that happens a lot. Just wait for whatever the range is, just wait for the break at the top of that range. A lot of times too, you'll get another pattern. Matic did this recently. Where'd Matic go? So I got chopped up in Matic pretty bad. It's just such an extreme move. I had a hard time with this one. This one beat me up pretty good. I mean, in a good way. It was a great, fantastic trade, right? But I kept getting out too early on Matic because it kept doing the same thing. It put in these parabolic moves, and it kept just faking me out over and over again. So I just was having to be real active, and I kept missing moves. But like that, I sold that little sell-off there. And then, like I said, exactly that. It ended up breaking this. And I think, yeah, this is your entry right there. It gave you an entry at least. And then you had another one. And it broke down. That one broke down for good, so that one worked out. It's been downtrend ever since then. Another time over here, I mean, these moves are huge. This is Matic BTC, so just forgive. This is the dollar. Our very first move was this one. This one was tough. So I think I got out of Matic over here, same exact thing. And then it went sideways for a long time. And I think I missed this initial entry over here, and I got it over here. So I don't even, I bought in January, I remember that much. My initial buy somewhere over here. But yeah, Matic kept doing this, or it was really tough because it would break and it'd consolidate and then break. And if you weren't watching the chart real close, I missed a couple of the breakouts and had to wait for it to come back down a little bit and eventually get back in. But a couple of these big legs I did miss. I didn't catch them all because of that. So one of these really big moves, maybe this one right here, I didn't get anything. Like I may have exited and not had a position for like that move right there, for example. So it happens. You can miss moves too doing that. But we are way behind on the stream. Are you guys like behind in time? I really like probabilities based on opinion. Holding up because shorts need to reload. Bad risk reward here. Way behind on the stream. Todd Butterfield to argue one of the best. Oh, so you're behind on the stream. Got it. Arguably one of the best Wyckoff experts sees this spring test and a bounce 50K dip to continuation. I'm with Todd. That'd be nice. Yeah, that's insane right there, those shorts. All right, guys, I'm going to probably wrap up here soon. I don't know. I don't have anything of more value to add, so I want to talk about the simple. Oh, I do want to address this one other thing. All right, on this chart, if you guys see this chart keep popping up, people put it in your face, and they say that this is proof of lengthening Bitcoin cycles. This is very disingenuous for two reasons. One, this blue line is highly inaccurate. You see that blue line right there? Day 0 since bottom to the top. It's very inaccurate. This blue line is actually longer. It's actually between these two, right? The blue line, technically speaking, should be in its totality right in between the length of the orange and the yellow. Let me show you that on the chart. All right, this is Hal Finney, one of the guy that I think is most likely. If you can pin one person as Satoshi, I think this guy right here is the most likely person. But there's several others, you know, Adam Back and Nick Szabo and others. But he said here, running Bitcoin January 10th, 2009. So the Bitcoin protocol was live. Blocks were being minted. People had ownership of Bitcoin back in late 2008, early 2009, right? So Hal's running his Bitcoin node here in 2009. So I count this as the date that Bitcoin first started actually trading. The first transaction where Satoshi sent some Bitcoin to Hal was the first technical transaction. Now, not long after this, people were actually, you know, using Bitcoin to try to pay for things or trading Bitcoin around. But it wasn't on an exchange being traded. But so from that event, when Hal tweeted that, all right, let me show you this BLX chart. What everybody's trying to show you on that blue line. All right, so the blue line is this time period right here. So a lot of people keep that blue line is from this date right here, and let me just draw it as a blue line actually. So what you see when you see that blue line is this. All right, that's not accurate because this is the first date that Bitcoin was tradable on certain exchanges that we're tracking. People were buying and selling Bitcoin all the way back here. The first Bitcoin blocks were actually mined way over here, right? So I count from the very first time I can find a record of any sort of transaction of Bitcoin, which is really the start, you know, of its trading. It wasn't trading on an exchange that was tracking its price, but it was trading. It's actually over here. So if you measure from the inception of Bitcoin's actual first transaction, not when it was on an exchange trading, to, which is a more fair assessment, you get it's 663 days from the beginning to the peak. And this is not a halving event, right? This is not either a swing low to a swing high. This is from inception to initial peak. Then the next swing low to swing high is, I guess 764 days. And then the next swing low to swing high was a little bit longer. But it wasn't 320 days as some charts would indicate. It was 600 days. So I think if I put this on my own chart, the blue line may be slightly shorter, but it's pretty close to this first one. Now, I put this out a long time ago. Last October, I did a bunch of work on this idea of are the Bitcoin cycles lengthening or getting shorter or what, right? Diminishing returns, all that. After doing a lot of work on it, I came to this conclusion. When I overlaid the dollar, the DXY, the strength of the dollar, Bitcoin is a risk-on asset. Has always been, and to this day is still seen as a risk-on asset. Risk-on means that when people are willing to buy things that they're risking their capital to purchase, right? It's a very simplified way of saying it. So it means that either the dollar was weak and it was driving people, and there was a lot of money available and times were good, the economy was good, and it was driving people into speculative assets. When the dollar is weak, you also get, you know, the inflation hedge assets and stuff like that, right? The anti-dollar assets. And then when the dollar is strong, it's typically a risk-off environment, which means that people aren't buying speculative assets. They're trying to buy harder assets, or they're moving to cash, they're moving to fiat, whatever it is. So when you look at the interplay of the relationship of these times, what you're going to notice is that the 2013 cycle, you see the dollar, the strength of the dollar is actually pretty weak. So this was a very easy monetary conditions, and it was a very risk-on environment, which lent itself well to a very bullish, you know, a very strong run when the halving event caused that supply shock. When that price started to move, risk-on assets were doing well because of the weakness of the dollar. And then the bear market came right as the dollar was strengthening. So what you see here, the blue line, that's the dollars, right? The DXY, the strength of the dollar in relation to other fiat currencies. But nonetheless, you can get it's the best single proxy you have, or I have, for just the macroeconomic risk-on, risk-off environment. So when the dollar is weak, it's typically risk-on. When the dollar is strong, it's typically risk-off. All right. So the dollar was very strong, which created, you know, also might have prolonged this bear market. Now you notice the start of this other cycle was a very, very strong dollar, which means risk-on assets were very weak. So while the halving did have an effect, and it did eventually drive price into the prior all-time high, it took a very long time. And you see here these little dips, that first, or where my mouse is, that first peak and dip, it got rejected off the prior all-time high before it got there pretty badly, and it spent a long time trying to get through there. It finally broke through, but it really started to ramp when the dollar started coming off, and this was because of easier monetary conditions. The dollar was weakening, and it was a risk-on environment. That's when the ramp really started to happen. So I contend that there's more correlation between the strength of the dollar and the length and the gains in these cycles for these speculative assets. And when the dollar is strong, that was the bear market and the slow start to this bull market, and then a strong finish to this bull market when the dollar was weak. And my summary was that 2020 we should have a stronger start, basically, right? So that was my summary, was, hey, 2020 is going to be off to a much stronger start than the 2017 cycle, which is precisely what ended up happening. And so, regardless of length of cycle or anything else like that, I think the macroeconomic condition is a lot more to do with you know, the effect, because it's driving the demand side of the equation. This halving event marked in purple here on my chart, the vertical lines, that, you know, changes the supply dynamic, but the demand side of the equation still matters. And so, as you can see here, the length of this first cycle was, I guess, is that right? 600 something days? Oh, you know what? Go back to my daily chart. Sorry, I realized what I did. It was 800, yeah. So earlier I had it wrong. 833 days from the first time Bitcoin ever made a trade to the peak price on that it was when it was being you know, traded more liquidly. It was the peak price was $30 something, but that was 833 days. So this chart is highly inaccurate. You see here the number of days since bottom. That blue line should be right over here. And that was the first cycle. So this is you only have two. There's only two samples, really accurate samples, from a market low to a market high, because the inception didn't have the dynamic of price coming down and creating a low and then turning around, right? It just started and came up. But secondly, this is highly inaccurate because the zeros should be way back in time, and the peak of this blue line should be over here, right at this 800-day mark. So the first cycle was actually longer than the second cycle, which then the third cycle, the second cycle was shorter than the first cycle. And the third cycle was longer. that can all be explained more easily by macroeconomics and risk on, risk off than it can be explained by every cycle just getting longer. And this cycle may be shorter too. Heck, you look at it, this cycle may be close to the same. You know, the first cycle was 800 days, and again, this is inaccurate. The second cycle was, you know, almost 800 days, 770 days or something like that. And this cycle might be barely over 800 days. The last cycle might be the outlier. The 2017 cycle might be the outlier at going on 1100 days because of the risk off environment it started in, and then the risk on environment it ended in. So another way of saying this is that this peak that we put in here is also not unprecedented in time, because we did peak slightly after the first and second cycle. Or the first wasn't really a cycle, but the first one of these. So anyway, I hope that helps color some. But when you see this chart, just remember, this is highly inaccurate. This is disingenuous. That blue line should be between these two. All right, everybody, take care. I'm gonna wrap up here. My throat's sore and I gotta go. I'm here for the chicks. Hi, Brandon. Do you have any thoughts on C20 crypto hedge? I vote for Adam Back, Secret Satoshi. Yeah, he would be a pretty good one too. All right, guys, take care. Let's see here. Let me kill this. Light up some music. Where's my Doge-wave at? Doge-wave. Let's end with our chill music.